the news broke on Monday that Macy's included in their quarterly filing an investigation, an accounting error. An accounting error led them to delay their quarterly reporting. That's the big news, right? So Macy's could not put out its quarterly earnings because of this accounting error that they discovered, and you can actually see it in the regulatory filing here. If you go to the Macy's financial reporting page on their website, Investors Financial Reporting SEC Filings, you can open up the 10K, and it was filed on November 25th. So I guess that was yesterday.
Yesterday.
Right. So in that filing, if you scroll down to, it says page 2, but it's actually much further. It's under the section Other Corporate Developments. We have this very intriguing paragraph. The company also reported today that during the preparation of its unaudited, condensed consolidated financial statements for the fiscal quarter ended November 2nd, 2024, it identified an issue related to delivery expenses in one of its accrual accounts. The company consequently initiated an independent investigation. As a result of the independent investigation and forensic analysis, the company identified that a single employee with responsibility for small package delivery expense accounting intentionally made erroneous accounting accrual entries. Erroneous accounting accrual entries, say that 10 times fast, to hide approximately 132 to 154 million of cumulative delivery expenses from the fourth quarter of 2021 through fiscal quarter ended November 2nd, 2024. So approximately 3 years. During this same time period, the company recognized approximately 4.36 billion of delivery expenses. There is no indication that the erroneous accounting accrual entries had any impact on the company's cash management activities or vendor payments. The individual who engaged in this conduct is no longer employed by the company. The investigation has not identified involvement by any other employee. And then they discuss that Macy's is delaying its earnings release and conference call related to the third quarter to allow for completion of the independent investigation. And they're going to they expect to release their results, their quarterly results on December 11th, or by December 11th, they said. And then there's a quote from the CEO. So this triggered a lot of questions. And there's a lot that I don't quite understand about this, David.
Even the verbiage of this, because this is to some extent the official statement about this. And
right.
it really focuses on a sole employee. They use the word hid, which is very odd.
Intentional.
Right? Intentional. No, and they're over and over again, nobody else was involved. We did an internal investigation. It almost, my first reaction listening to it now that you read it out like that is, are they kind of, don't look over here, we got it under control, to avoid a bigger investigation?
Right. This is a little odd. I agree.
Yeah.
It's strange too that they announced that the internal investigation determined that the employee acted alone, but also the internal investigation is ongoing. And it also feels like this was discovered very recently because their earnings were due that day. For the fraud for fraud to happen, usually there's 3 things present. I mentioned the fraud triangle, so I just want to cover this. So the first is opportunity. That means you have to have some sort of weakness in your internal controls that allows the fraud to occur. It's clear that happened here because a single employee was able to make improper accrual entries for years and nobody caught it. That's an internal controls deficiency. There should be something in place to catch this. The second is pressure or incentive. That's also motive. Personal financial difficulties, addiction problems, fear of job loss. That could be one. We'll talk about that.
But we don't know anything about that because he's a mystery employee still. We don't know.
Yep. And then there's rationalization, which is the person doing the crime rationalizes why they're doing it. And usually it's something like in finance, I'll pay it back later. I deserve it. I'm
I work so
underpaid.
hard.
I was
Yeah.
mistreated, right? That sort of thing. Um, so going back to the motive or the incentive, I don't understand why any accounting employee acting alone would cause a material misstatement in financial statements. What is the benefit to them? It's extremely risky. It's career ending. It's you could go to jail for it. So that doesn't quite add up. That is a mystery to me. And so if that is not true, maybe the employee was not acting alone. Maybe the employee was pressured. That's possible. We don't know. But I would be very curious to learn more about this internal investigation and how exactly they determined that the employee was in fact acting alone. If they did, maybe that's just what they're saying. We don't know. Um, so, but as I'm thinking about this, I did think of one motive, which happens. It's not common, but it's possible that this employee didn't really know what they were doing, was just following last year and maybe made some mistakes, maybe did it wrong and didn't want to own up to it. And so just kept doing it the wrong way and covered it up and did not report it. That would
Like
be intentional and that
so
would be a fraud.
they realized they were doing something wrong, and so they're like trying to fix it, but they didn't want anybody to find out they were wrong.
Or
A
maybe
good
they,
analogy is somebody who can't read, like tends to pretend they can read.
there you go.
You know,
Somebody who doesn't know their debits and credits,
right?
gets a job working at Macy's, is responsible for the small package delivery expense account and makes the incorrect entries for a while and then realizes what happened and decides to just cover it up as long as possible. And so that's a possibility.